Hi, Warriors. Weaker dollar today. How's everyone doing? Scott, nice testimonial for Ryan. I tweeted it. Mike, Blake, how are you? RC, Steve Bartholomew, Bran, Turnaround Tuesday. That's right. There's a new name, Nikita Gohill. How'd you find us, Nikita? James Groom, RJP, Ingmar, Hugo, the rest of the crew. Okay. So I thought I'd start off with yields. That's not what I want to do. Okay. Anyway, what the story is. Okay. Ryan, you around? Good morning, buddy.
Morning, mate.
Made some pips for people this morning.
We're trying to.
Okay, so you got the euro trying again. It didn't even get to a fib. I think
No,
this was a fib right here. And what I think it's 38% here, or is it 23?
probably
Anyway,
23, I
very,
think.
very shallow.
Yeah.
Um, and all of a sudden, Aussie came to life. So went back to the support level. Dollar looks lousy. It just couldn't rally. Uh, got over this 3.5 level and hasn't. Yen's reversed from 51, which was the target. So guys, here's your lesson on wedges, how they can retrace 100% of the move. The high here was 51.30, and we got to 50.90. So 51 was the target of this wedge formation. So when you're trading a wedge, yeah, you could take partials at 50%, you have a couple objectives, but uh, this is really fulfilling uh, the breakout of a falling wedge opposite with a rising wedge. So okay, Ryan, why don't you just repeat what you said on the flow show today?
Well, God, we changed it up a little bit. Usually it's me showing charts and showing my levels and everyone talking about it and whatever. But I decided to change it up. So I put up 5 blank charts, different assets, and got the viewers to give me their levels, what levels they would look at to trade, sort of intraday. And
Yeah,
we got a few levels loaded up on the charts, and a lot of levels. Everyone's pretty much got the same levels here and there, and some want to short against a level, long against a level.
right.
We were looking at in euro dollar was 107.60. Few people, including myself, have had that one pinged for. I actually dropped some bids in this morning at 65. Unfortunately, never got that far down, but
70 bastards. Yeah, okay.
76
Uh,
and on the low. So not
mhm.
quite, but it can't. I thought we were on our way after that 108 break, but it just can't stay down. It's still maintaining this rally, but we're getting a series now of lower highs coming in and lower lows, so that's something to keep an eye on.
This looks pretty critical here. I'm
Yeah,
echoing.
yeah. So that's the
Breakdown.
tariff headlines again.
Okay.
I was looking at. I was well. You set out a plan. I was looking to hit another rally up towards the top on any sort of last minute trade tariff news, but it's all been dumbed down and looks like we're not getting as much tariff stuff as we were going to get, and some of it might get kicked again, and so the market's like, okay, we're done. So yeah, if this one breaks under 65.70, it's probably going a lot lower.
Okay. Yeah, this is pretty key formation. Well, you could just measure this is the
Yeah,
potential of it, right?
yeah.
From here, if it breaks down. So what are you talking about? Five and a
40s.
half, 300, 139.80.
Yeah.
It's a possibility if that's taken out. Just wanted to also bring up that the melt up guys are back. Okay, so yesterday, hold it. Yesterday you were saying, well, we're all the 4,800 guys.
And
Well,
never got the 7,000 guys back, have we?
they're back. They're back. They're saying this was it, and now we're into melt up territory. I don't poo-poo it because these guys have been
No,
right up until this. I know these a couple of these melt up guys. I talked to them, and I don't think they saw this 10% sell off coming because a lot of them had original numbers at 61, but when we were there, it was 65 and then it broke down. So I don't think they got shorts off, but they're back on. That's it. Now here we go. I don't know, targets differ 6,500, 7,500. I don't know. Maybe I just can't see what the catalyst is going to be. So, uh,
history. History is your catalyst.
okay, okay,
We've come through the last 20 years doing nothing but rally.
okay.
We've come through everything.
That's why,
Everything you
don't
can
you
throw at
think?
it.
Yeah, but don't you think we're due after all that time that you're talking about for people to have bought the dip and maybe they're okay for a while and that 10% correction dip bought finally doesn't work.
It's always possible. Of course, yeah,
Yeah,
it's always possible. But
it's been a long time.
what's the catalyst going to be? If you can come through financial crises, you can come through the highest inflation numbers you've seen in decades and the highest interest rates you've seen in decades, the lowest interest rates you've seen in decades. You come through all that, Trump, Biden, wars, you name it, and stocks can't go down. What does get it down? Alien invasion? I don't know what. It's going to take an event, isn't it? It's going to take another crash, but then we'll probably recover from
Well,
that.
I don't know. Is the economy that solid in the UK? Because I don't think it's that much better here. So I think a weak economy and layoffs will do it. A
Yeah,
recession.
but
Uh,
then the market will be thinking, oh, here comes rates to
the
zero,
Fed.
QE, and
Yeah,
it goes higher again.
yeah.
So even that
All
won't bring
right.
it down.
Anyway, let me talk about something I know about because I've been talking about that we should get to about 35.60 here to fulfill a three drive in silver. It looks like it's on its way if you just take a buck and a half break and then break out over 34, take it a buck and a half higher, and it gives you your 35 and a half, 36. Here's the incomplete pattern that I think we're about to complete by taking out this high. And I'm stalking because I believe in the gold silver ratio that it's a short here and it's going a lot lower. My preferred short when that happens in silver will be gold. The weekly looks great, but I was looking this. People were asking, why don't you short gold? I said because of this and because of this. And I said you have to wait for it to do some work, distribute, and this high at the all-time high diverged, but it was over 70. So if we could rally one more time above this high, I I really don't think it's going to get over 70. So I think we could be completing something just for a correction, 2,500 or something. But I'll be looking at that, trying to short gold. Where's it at on the DSI? 110? Do you know, Ryan?
No, it's actually, and good morning.
Hey, good
I
morning.
believe it's back in the low 80s. Let me double
Oh,
check that
okay. So
really
it
quick.
peaked. What was the high reading there, Blake? Was it in the 90s?
It never got because it wasn't so extreme. I mean, we say extreme. A lot of people when they're looking at daily sentiment index, they usually think it's like, by the way, it's at 72 right now. It never
Okay.
really gets extreme if you're grinding higher. It's when you get the
Uh,
big pushes, you know what I
Parabolic
mean?
moves. Yeah.
Yeah, volatility has to kind of be a factor in for sentiment because once you get an accelerated move where it's like, oh, this is going to be a meltdown or this is going to be a blow off top type of, mentality, that's when sentiment starts to really get, lopsided. But
Yeah,
gold was just on a grind higher forever. But
yeah, very orderly.
yeah, gold's at 72, silver's at 65.
Okay, thank you, Blake.
Yep.
Um, all right, anything you're looking to do? Levels, important levels for you, Ryan. I know you're concerned about what might happen in cable. What is it, a budget or something coming up there?
It's called a spring statement, which is supposed to be just an update of forecasts and how we're doing since the budget, but it's turned into something more than that. They're expecting, or we're expecting, our stats office, our financial fiscal watchdog, to cut growth in half tomorrow. That's how positive they are, and then the chancellor's got to skate her way around that and how she's going to boost growth and not crunch the country. But the sentiment is sinking over here. There was a poll out saying that the majority of people think things are getting worse for the economy, and if they think that, that's going to affect how they react, how they spend, what they do, save more, spend less, and impacts the economy. And the same thing potentially is going to happen in the US, like you say, Dale. We had Bostic yesterday questioning consumer sentiment surveys. Are they a leading indicator? Yeah. Well, the PMI yesterday showed business optimism at the lowest since 2022. You know what it's like. If people get in a certain mood, it affects their habits, and that's what brings lower activity. So it's there. We're getting there. They should ignore it at their peril.
You know what's happening? Confidence goes away once people discover the con in confidence.
Yeah.
All right. Who would have thought after the Fed, when it looked like we were going to break down, now we've broken out in 10-year. TLT is on its way to, I had about an 88 target. Maybe it's going to hold here. It doesn't look great. We get through 88, TLT could go to 84. So, well, the market probably likes it because it shows growth, right? Yields going up for a while.
Depends.
It depends on the speed. A lot of people are already calling that this is going to be a false breakout. That just tells me how, bullish people are hoping for this big bond rally. There are a lot of bond bulls out there that, they think the bottom's in, and maybe they're right. But if we start taking it, you look at the weekly, and does this look bullish to you?
Nope.
Yeah.
Not at all.
So, yeah.
If you look at that 10-year yield again, and without looking, what would you think dollar yen would be doing on the back of that 10-year yield?
Yeah, it'd be up 80.
Right. And meanwhile, we're testing the lows of the day.
Yeah.
In dollar yen.
So forget their correlation. Although they did kind of work heading up for a while. They delink for a few days at a time, but I think if you did an overlay, they'd still be pretty close. Anyway, why don't we bring Blake in? Blake, where are you at on risk with now that we have the melt-up guys really pounding the table? Are you with me thinking that there's going to be a day, and maybe this is it, that buying the dip doesn't work?
Dale, I can't believe you haven't said it's turnaround Tuesday yet. Did I miss that?
I said it when I was saying hello to everybody.
Oh, okay. All right. Well,
it's not a flag. It's not the flag. It broke out of that flag that you thought we were in yesterday, didn't it?
I still have it at the upper end of the flag, so I'm not.
Let's see it.
Yeah, I'm not. I haven't given up on it just yet.
Okay.
So here's
because I'm thinking 59.20 is still viable. But
59.20 all the way up here at the 618. Yeah, I mean it is. I mean, for sure. I mean, you can't rule anything out. Nothing. I would think so. Let's go over to the daily chart. So that you're probing the 200 DMA right now. Just because you're probing it doesn't, if you break it, doesn't mean anything, especially intraday. It's kind of what happens by the end of the day. So yesterday we closed above it. Today we're above it, obviously before the stock market even opens. So how we close today probably matters more than anything. As I was, I
Yeah.
was telling our traders yesterday on the daily roundup, I'm like, it is hard to be bearish and be at the top of a flag and, go, oh, what, we got to just stay bearish. I mean, you can't ignore that it was a big green day yesterday. We are at the 200 DMA, and there's some potentially positive news with tariffs. I mean, even today, when you're getting, things like this, this is the news and research room and Forex Analytix. You're getting headlines like this about the two-step tariff plan. People go, wait a second, this isn't going to be as bad as I thought, and so there's still a risk that we could get up there, Dale. I don't want
Yeah.
to ignore it,
I know.
but today, let's just talk about today. So today there is a piece of data that I think we need to all pay attention to, and it's going to be the consumer confidence. Take a look at, first of all, you have the forecast, right, which is supposed to be at 94.2. But look at the previous actually 4 readings. But remember last month it was a disaster. Market was looking at 102. We dipped below 100, which everybody goes, oh my God, we're below 100. But look at the previous readings, not so much that the fourth one there, but you can see 112 to 104, 105. It was a bit of a dip, and then last month was a bit of a, it shook the market a little bit. And we have house price index, which, if as an American, and I say this is the majority of the wealth in the US is the boomers. Dale,
Yeah.
your generation, they've
Well,
got all
why'd
the
they leave me
homes.
out, those boomers?
They got all the homes, they have all the
Uh,
retirement, they have 70% of the wealth. They are the spenders right now. They're the ones that are spending. I mean, hell, my parents are like, oh, hey, we're just gonna go buy a place in Spain, and they're in Spain right now buying an apartment. I mean, that's just kind of like, it's this generation right now. They're spending while the stock market is, higher. And if you start to see home prices and stocks suffer, that consumer confidence will go in the toilet, and consumer spending will drop dramatically. They're the ones that's pulling the ship along right now. So that's why I think today's data, not only the consumer confidence, but also the house price index, which is it's coming out in about an hour or so. That's going to be a number that the market's watching. I mean, I think you got to be paying attention to that kind of stuff. But you were talking about the Canadian. I do want to talk about the Canadian because, we are sitting on support. And you had your chart drawn a little bit differently. This is my daily chart from yesterday. I think you had your
oh yeah,
you were connecting these right here, which,
yeah,
tomato. I think we're
right.
just on some really, really
It's
critical support here.
how thick a line your pen draws.
Yeah, right. It's the thing is we're really in a very tight
Yeah.
consolidation, and let me delete that.
You know
And
what
then
traders used to do in those formations, Blake, when they compress like that, and you know that there's not you don't know which way it's coming out. Sometimes the first breakout is a fake out of these, like with bully bands.
sure,
But
yeah,
they would do vol spreads. Okay, they'd buy a put and a call, knowing that the direction it comes out of is going to more than compensate for the one they're wrong on. That's what people do with compressed formations. Um, I've done it a few times. It can work, but
yeah. I mean, and it's kind of like, yes, I
you
know
can't.
exactly what you're
Yeah, you
saying.
can't do it with your FX. I mean, with FX, but you could do it with options on these
There are a lot of
formations.
European FX traders that do options like that. And
Oh yeah,
Ryan, do you ever trade like that on a triangle like this?
do a vol
Uh,
spread.
yeah, some not through the options. I trade it normally, but yeah, I think dollar CAD is a particularly good one for those sort of patterns.
Yeah,
That's why
that's
they
gonna
call it the
good.
loony, baby.
Well, it's gonna be could be a 300 pip move either way.
Right. Well, yes, I agree with that. And especially with obviously the headlines coming at the end of the week or beginning of next week, that could truly be the case. But yeah, I'm looking at it as we're really getting close to a breakdown here. I started selling some dollar CAD this morning when I first got up as it was pushing these lows. I'm barely profitable, but I am short a little bit from a you can go into the trades room. You can, trades room right here. You can see at 142.92, that was 3:50 a.m. So you're talking an hour and a half ago. I started shorting the dollar CAD. I'm not married to it because I know all the support is here. But if we break down, this is one of those that you test the waters, Dale, and
Yeah.
it starts to accelerate. I start adding. I don't mind adding into weakness if it's going to break down. But it looks like we have Steve here. Steve, there's a Greek holiday today, isn't there?
There absolutely is one. Yes.
It's Independence Day. But who do you declare independence from?
Our wives.
All right.
He didn't even
Great.
hesitate.
I mean-
How do you express that? I don't know how. How do you do it, Steve?
I explained to her that this is the only day of the year that she can't beat me.
So and by the way, Stelios, he's out and about today in Greece. He's at the highest point in Athens. He just sent that this just a bit ago.
He's at Lekavitos. Okay, interesting.
Yeah, so he just showed us that. I mean, it's a beautiful view of Athens.
No,
there is
it's a horrific view of Athens. Athens is a very bad-looking city full of cement. So, yeah.
Yeah, but for those of us that live in the desert, it's pretty cool. What is your port, the main port called?
Piraeus. You call it in English.
How do us Americans? Anyway,
Piraeus. How's the
Piraeus,
traffic
right
driving around there? How's the traffic, Steve? Because I know you like to go fast.
Amazing.
You mean bad? Amazingly
Yeah, it's
bad.
such a blast,
Oh, yeah. Okay, like LA, you think?
Dude, it's like
the
New
distances are not that great, fortunately. So, in some sense, it's better.
You walk.
Dale, imagine New York in its heyday at the busiest time of the day with 3 times the amount of motorcycles. That's what Athens is like.
Oh, wow.
Yeah,
Wow.
I know. Just think about that for a moment. I drove in downtown Athens a couple of times, and I did not have a pleasurable experience.
I'd never leave my apartment.
Go ahead. Steve, happy Independence Day. Anything that's on your radar today?
Now, one, you talked about it. USD CAD is testing key support at the moment. So having to do with FX, I'd say that USD CAD is in the spotlight at the moment. We had the break higher in USD yen, but that took place yesterday. So that's in the spotlight because it's now in breakout territory. Indices have been appreciating, and the S&P is now approaching a couple of resistance areas that are of interest. First of all, we are at the 200 daily moving average at the moment, back testing it as a resistance, and a few handles above it, we have the broken channel trend line support that might act as a resistance just above 5,800. So I'm waiting to see if we can get some kind of rejection from there and turn lower once more. Having to do with the dollar index, The recent price action, despite the 4-day rebound, seems to me more of a consolidation.
Yeah.
So I wouldn't be surprised if we, if we turn lower anywhere between here and 105.
All right. Yeah, and by the way, the 105 level would be the 200 DMA. It would also be the 38% retracement of the
Yeah,
last
105
drop.
is a confluence of resistances. That's why I consider it an important level for the DXY at the moment.
Right. And that's what Steve is outlining right here would be pretty key resistance on any move up. So, well, thanks, Steve. I appreciate that. I want to just real quick, I want to go back to Ryan just because you were talking about the UK spring budget. And you said a couple of pretty important things. The market is expecting, or everybody's expecting, growth to be downgraded quite a bit. But the fact of the matter is, you just said the market's already expecting, yet sterling is holding up pretty well. I mean, is that telling you something, Brian?
Yeah, it tells me that maybe she's washed out a lot of the big threats. We always know that we get the super nuts of what's coming before we actually get there. So we've had that. We know what's coming. The question really surrounds, what is the market going to do with it once it's finished? Once we know exactly what we're getting, is it going to say you've sucked up your fiscal headroom, you've got no room to go? The only way forward is tax hikes, which is going to be a negative. It's how much damage is coming, not necessarily tomorrow, but at the next budget later in the year. So yeah, we might be taking it in our stride right now, but the proof of the pudding is going to be in the data afterwards, and particularly the gilt auctions. Because if the market, we've got one literally tomorrow, Thursday, I think, another one, and if the market takes a dim view of the stuff tomorrow, that's where you'll see the first reaction.
All right, very good. Appreciated that, Ryan. All right, we have it's been actually a pretty quiet first couple of days of this week. I know we're only into Tuesday, but I feel that the remainder of the week is really going to heat up. We have and don't forget, we have PCE at the end of the week. We have the Norges Central Bank that's meeting as well, and I don't know if you guys have seen it, but the U.S. dollar Norwegian krona is absolutely getting smashed. We are at, and let me pull it up here. We're at new trend lows right now. You can see we're pushing new trend lows here, but we are not too far from the daily chart breaking like some of the support, because we start breaking through these levels, and that's going to be pretty bearish. And I know everybody's paying attention to the euro because the euro is obviously holding up pretty well. I mean, we're not too far off of the highs there, but some of the focus, you might want to keep it on the US dollar Norwegian krona and maybe some of the other secondary rates that you might not pay as close attention to. And then like you also got the Kiwi that's had a really big pivot off of what I consider strong support. This is 50% retracement, but more importantly, this trend line, broken trend lines obviously held, and it's keeping it relatively strong, especially with copper. I don't know if you guys have seen copper, and probably the only thing that's keeping the Aussie up right now is the prices of copper, which are just about ready to
parabolic.
Yeah, I mean, Dale, this is maybe a good indication that the world's going to be heading into a low growth, higher inflation. When commodities rip higher and growth still can't keep up, that's stagflationary type of stuff. I know that word's been thrown around quite a bit.
The things we own will decline in value, financial assets. The things we use will continue to rise in cost. So the things we own aren't going to help us out as much going forward. But the things that we need to live, gas, energy, food, all of that, let alone, I have no idea how much higher. A buddy of mine lives in Arizona, Blake, and he was getting his avocados and he lives on Social Security, so it's important to him. we forget because we don't have to try and live on a meager budget. But he was paying, I think, 48 cents for avocados a week or so ago, and now they're 85. And tariffs haven't even kicked in yet. So, people are going to be paying more for food.
We pay more for food, for
Yeah.
things that we use, crude
Yeah.
oils, bouncing, and it looks like we're going to be trading back towards 70, and as growth slows, yeah, it's kind of scary.
Trump has issued a 2-month ultimatum to Iran about their nukes. That came out last week.
Yeah,
then,
that was
yeah,
60 days, right?
Yeah, 2 months. And
Yeah.
then they sanctioned a Chinese energy company for taking in Iranian oil. I mean, things are heating up, and then China comes and shows a ship they spent billions on, and its only purpose is to cut deep sea underwater cables. It's weird out there, bro.
It is. It is
Scary.
It is scary. Hey, real quick, do you have you have a
Zach is here.
He is? Okay.
He doesn't want to be promoted either. We try and get promotions away every day, and Zach keeps rejecting being promoted. Come on, we're going to make you an executive, senior broker. Accept it. Come on, Zach.
So real quick,
There he
Nikki was
goes.
asking about the FTSE. Ryan, do you think that the FTSE would be a better sell than sterling? Maybe there's some rotation actually as you get the end of month, end of quarter flows too on top of that.
Yeah, there could be. If we're looking a bit more dire than Europe and the positivity that is apparently over there, we could see a bit of rotation out of the FTSE, maybe more into Europe, but it's still holding up there. I mean, it took forever to break. FTSE's never rallying like every other index is,
Right.
but it's holding this break up at the moment. Yeah, we could see a bit of rotation, but we'll see.
It's a nice top pick, really, and a pretty tight risk if you do it over the high. Anyway, I have Zach here. He's ready to go with his Elliott Wave stuff, and Ryan, you're a rock star. Blake, you're the lead singer, and I'm the roadie. And we're a band. Okay, everyone, we're a band. And thank you guys for, getting people ready for the rest of the day.
Thanks, mate.
All right. Thank you. Thank you, Coach. Man. Thanks, everybody.
You're becoming very famous, Ryan. I'm starting to get jealous.
As long as I don't appear on Crime Watch.
What's that show on CNBC? Where they show all the people who committed frauds. I forgot. There's a million of them. Anyway, here's someone who's real. Zach, how are you?
Good. How are you, Dale?
Good. Great to have you back on F.A.C.E. I was hoping I could start with this. We had this 10% correction, and the melt-up people are coming back on board. And I think that one of these years, buying the dip won't work. Where's your head at, and wave structure in any of the stock indices?
So
S&P.
I think this is only the first half of at least a good bounce. Here, let me put some charts up.
All right.
I think this is just the start of a bigger bounce, and there's a lot of good potential for a more significant top to have been struck, but we're not there yet in terms of confirming it. I think NASDAQ probably argues the best.
They were the weakest, 14%. Okay.
Right, but also like more easily counts complete as a larger structure off of a fifth wave off of 2022 lows.
Okay.
And even some things in the sectors here, it even failed to make a nominal higher high in February, which I have my alt little yellow wave 5 here is just a possibility that this was just a slight extension, but that truncated.
Okay, that's not the NASDAQ 100. That's the NASDAQ.
Yeah, this is just
Right.
the Nasdaq futures,
Okay.
which counts a little bit differently than the S&P. It seems to count better as just a cycle wave 3 top. So, which gives us a little bit more clear degree parameters for where ultimate support may be. But in the near term, I think this is only just the start of a bigger bounce. I want to see a correction hold a higher low. I think we're pretty much getting to the end of this move off of last week's consolidation. We're right at a 100% this morning. Could get
Yeah.
some more extension. There's not a very clear 1-2 in here inside this 3, so this could get another 4-5 on up towards the 20,600s. But most of this measured move is done, and so, but looking for the correction from that to be, it could be deep. It doesn't have to be, but at least to hold a higher low and set up for another swing move into probably through most of April and maybe even into the beginning of May. And that's going to
Interesting.
get all the people who are bared up over, this correction, bulled up again just in time for us to possibly start a move down from that resistance region. Now, if it does what it did, the last several times we had a nice move off of a potential significant top, and then it filled out a corrective bounce and then got to that decision point and then just consolidated a little bit and then kept going, then we might be back in extension mode. And certainly the ES allows more for potential extension higher. Mentioned with the Nasdaq, that move off of 2022 that counts more easily complete on the Nasdaq. On the ES, it's much easier to count this as just a larger wave 1 and wave 2 off of that 2022 low, and then this was just the top of wave 3. That really should, similar to the Nasdaq, get another leg down after this, even if that's not the more significant top, which I would prefer. And then from there, we can get another extension and melt up and bigger blow off top. It's interesting. Garrett and I look at a lot of the individual sectors in our Thursday webinars. So usually we're going to pick one of those particular sectors, delve into it, look at the key components in that sector, and look where they agree with what the ETF looks like and where they differ and which ones are providing strength, but also doing that comparison between the different sectors to see that rotation potential.
Okay, so would you say that your preferred short would be the Mag 7 since they had the deepest correction? I mean, let's go with something like Apple.
So I mean, if you just look at tech in general,
Okay.
the like XLK, similar to the Nasdaq, I think semiconductors actually do have the biggest potential for a more significant top. So when you compare, this can count the same way as that high for the cycle wave 5 of the Nasdaq in February, looking for more of a bounce, with this possibly just being a larger A wave, and so that would push this up. I think, yeah, we can give that the benefit of the doubt that it's going to be.
So you're looking for the market to correct its we were in extreme fear mode. Now we're in just fear mode. About a month to rinse that bearishness out of the market and have people be vulnerable. They'll think they were geniuses buying the 10% pullback, and
Exactly.
we're going straight to new highs. But it's a failing rally. Use your fibs, right?
I think that makes the most sense, but again, I'm not gonna
All right.
fight it if it decides that it doesn't want to turn
And
down.
what would tell you that back over 6,100? Because I'm looking for 5920 as a possibility for a sale in SPX.
On
61,
SPX.
61.8 back.
Yeah, if it gets over 6,000, then it starts to, it really depends on the structure for the S&P getting there,
Yeah.
for it to really, be something more than that. So in terms of things that look more like there's a potential top in place, one of those things is like transports, IYT, but even those things,
Retail.
they're so far filling out corrective structure off of that high. So
Okay.
even if this is the start of a bigger bearish move, and this is just a fourth wave and it gets another drop to lower lows, which would concern some people, it would still be due Elliott Wave wise, look like it needs at least another bounce back up here to the low to mid 70s. Even if this is an ABC for wave one of something even more bearish, or just an A wave and it needs a B wave. So, I think the topping process is a process. And, we had a couple of opportunities at lower highs in the past to get some stronger moves to the downside. And then we just consolidated at those levels and didn't really turn down.
Okay.
So,
Yeah.
we gotta restart that whole thing. So here's like the equal weight version, which you mentioned, like the Magnificent Seven. And I do think that those are going to play a role, although I'm very, very bullish Tesla. I think that might be something that runs very counter to what the rest of the market is doing. And I don't exactly know why from a fundamental standpoint. I know why based on sentiment. But its chart looks very, very different. I think the pullback was a significant low for that. But the equal weight, I think we're bouncing in a similar B wave. This can be a larger version of just this A wave. We're still only between the 382 and the 50%.
I really don't even know what this is.
The QQEW is an equal weight NASDAQ.
Oh, okay. All right.
So it kind of smooths out the distortion that we get from those Magnificent Seven. But this same A, B, and a C wave down, while it could be the start of something bigger, it's going to be due for a bounce at least. And there is that potential that this is just a larger 3-4 and we get another extension. And, we look for what are those things that if we are going to get more extension, what are those things that are going to fuel it? And so, if we're going to get a more crazy blow off top, while MicroStrategy might have put in a more significant top back here in November, the initial move off of that is only 3 waves down. So this can be a corrective bounce. And if it doesn't get 5 waves up as the start of a 5th wave, then there's a possibility that if this low support breaks, then it's going way, way down. But this has some nice potential for a blow off top that can take it into
with Bitcoin.
And we're also looking for those opportunities that can set up as short stuff. We're looking a lot at some of the retail names. A lot of those held lower highs that look like B waves back earlier last year, and are getting some good price action off of those highs and the possible start of a bigger C wave down. But a lot of them rely on corrective structure, so it's not an immediate clear impulsive start to any downside. So it's going to be a slog that allows for lots of corrective bounces, and if those bounces get over resistance, then that can easily derail the downside potential. But we are looking for the things on both sides of the equation. If we're going to head higher and get past the resistance that we're looking for on the bounce, and also what's fueling that bounce. Right now there's a lot of good, the Tesla was great yesterday. There's a lot of good small caps and
so why are you bullish Tesla?
I mean, Elliott Wave.
I mean, it's all the first thing I heard you say all day that you have conviction about. Most of the other stuff is on one hand, if it could do this, on the other hand.
Right, okay.
So let's go to what you have conviction about, Zach. Instead of, yes, we know markets can go up and down.
So I'm counting Tesla as being in a larger cycle degree wave 3. Its primary 3 of that cycle wave 3 hit just shy of a 1,236 fib extension back in 2022. At a slightly truncated high, held a 4th wave. It's filling out as a diagonal. So we only have 3 waves up to start that move. But while this could have been all of the wave 3 and this is the wave 4, I really think this counts better as an A and a B inside a much bigger 3rd, because Avi's Fibonacci pinball suggests that when the 3 of your larger 3 hits that 1,236, the 5 of 3 is going to try for that 1,618, which on Tesla is all the way up at 1,434.
So you buy it and your risk management is under this recent low that we had last week?
Yep, we're following really closely the structure here off the low for this to either get 5 waves up as a bigger wave 1 or an A wave of this wave 1, or
Yeah.
maybe fill out a leading diagonal for this wave 1 of C. But
Okay.
it's looking great off the low so far. But
yesterday.
allows for some consolidation now.
Yeah. Okay. That's a big call, and that's a big contrarian call too. Thank you for that.
My pleasure.
I thought it was probably toast because it was kind of the weakness all the way on this decline. What
Right.
did we lose? A 50% decline,
Yeah.
right?
But it still is outperforming some of the other Magnificent Sevens over the last 12 months or so, despite
What's been weaker? Apple,
let's
Nvidia has it's at 120, 120, so it's down 20%. But I don't know anything
Apple
that was down.
Isn't down nearly as much, but it definitely has more potential to count as an even more significant top. But again, so
Yeah.
far off the high, things we're starting as baby steps with corrective moves. So can get another low on Apple in the very, very short term, maybe when everything else is pulling back in that B wave of the higher bounce for a B. And then Apple's going to lag, and it can just be starting its B wave bounce after from that possible one more low.
Okay. Longer term?
Longer term?
The top, I think I saw someone say this was 5 of 5. That was it, 5 of 5. But
so I'm not quite as I mean a super cycle degree wave 4 that takes it back well under 100, is
that's pretty big.
Is pretty bearish, but I do think that it's going to have another run up after that. I think this is a super cycle wave 4 for Apple, while the same consolidation would be a cycle degree wave 4 for the NASDAQ itself. But this really counts like an ending diagonal. One of the things we know in Elliott Wave, after an ending diagonal, usually the correction is pretty fierce and quick, at least to start off. And ultimately, it's going to try and head back to either the prior degree wave 4 or the originating region of that diagonal, which, for Apple, that can easily take it down closer towards the 30 region.
That's my favorite. That's my preferred short on further strength in the market.
Okay.
See, I'm thinking that maybe we could get back to 230, and wrong over 250.
I mean, I would even dabble in a short possible
right here.
If we I mean, I think it's
here.
pop up to 224 region possibly in the next
that's 38%. Yeah.
Right. And then drop down towards 201.
Yeah.
Might not be a bad play, as long as you look for that to possibly end more abruptly if the rest of the market catches support in this region. And then
can I ask you if this is an alternate Elliott count, that we get this at the first break, and now we're going to have some type, and you're looking for a correction, some type of ABC that we're ready for 3, that's 2. This correction we're getting is 2. That would be the most bearish count you could come up with.
Yeah, I mean, the problem, I mean, it's certainly a valid, we use the Fibonacci ratios a lot, to give us some additional clues at the smaller degree. So one, you only have 3 waves down here, but it is to a 100% measured move of this move off the high. So if anything, this counts better as a 4th wave, allowing for one more low that's going to get to the 1, 2, 3, 6. Usually your wave 1 of
the S&Ps is what I was talking about.
Oh, I mean, the S&P is also still 3 waves down off of, a potentially very significant high.
Okay, well then so is Dow. So is the Dow.
Right.
They all are. So they're all just 3 waves.
I mean, you could force it as something other than 3. I mean, I'm fine with looking for confirmation of this being a more significant top rather than end up holding another 4th wave and getting another extension. But in this bounce, I think this is probably just the A wave. So I would first be looking for a corrective move to hold in the 5500s, and then get another move up towards that resistance that we talked about before, as opposed to slicing through that like an impulsive start. Now, if this is you know, it should
What if
not.
we don't have a pullback here and we just go straight up towards fib levels? If we don't have a pullback here,
There are
they
few
just keep
indexes.
squeezing.
Right, there are few of the sector ETFs where this looks like an A and a B, the same as this, but instead of it being A and B of an A wave, it looks like the parentheses A and B, and then this move looks like maybe just wave one of a C wave that will get a little bit less of a consolidation and then just extend more directly higher. I think XBI is one of the ones that I think looks a little bit more like that, and also
home builders.
No, XBI is a biotech.
Oh,
And then
bios.
also the semiconductor index at the smaller degree looks like that as well. I think it's in a corrective bounce as a possible wave one start to a bigger C wave down, and this is working on the wave two. But here, instead of this being an A, B, C completing for all of a bigger A, it looks like this is a 1-2 start to the C wave already. So it can consolidate a little bit more in this wave two, but is not going to get nearly as much of a retrace and might be racing the rest of the market to head up higher into the end of March and into April.
Okay, and you know, the semis hadn't made a new high since last July.
Right.
So I mean, they kind of led the whole decline.
Exactly. And we were looking at a pretty big discrepancy between the actual semiconductor index and SOXX, which follows that, and the SMH ETF, which allowed for an attempt at one more high. And this was much more heavily weighted to NVIDIA and AVGO and I think TSM. Those three, we're trying to hold some support here at the end of February to allow for another blow off top to one more high. But at the same time, we were short SOXX and short AMD and looking for, you know, those to be the leaders on the break to the downside. So now these are more aligned that it broke that support.
Okay, NVIDIA being the grand, you know, really I guess they call it best of breed, right?
I mean, at least it was for a while. I think it also might have put in a much more significant top at this truncated top in January. Actually, it's not truncated. It made a nominal higher high over the November high to count as all of that fifth wave. And now we're just working on the same kind of corrective bounce.
Right.
It's interesting. It hung back a lot compared to the NASDAQ in the past several trading sessions, where the NASDAQ filled out more of a larger version of this A wave, you know, the A, B, and a C wave of an A wave. This looks more like it held as just a B wave and a wider flat B, and then it's going to sync back up with the NASDAQ after it gets more of this consolidation here.
Okay. You want to wrap it with either gold or the miners?
Yeah. So, I mean, the gold, we are still bullish on and think we're heading up to further all-time highs, but off of the 2024 consolidation that we're counting as the B wave inside wave three, it really looks like we're pretty close to a top to that intermediate degree wave three. So we're seeing that is a lot of good potential for rotation in the mining sector and for silver to outperform.
Okay.
Looking for
so you think that even on this pullback, that the shares, unlike what they've done for years, will hold up better than the metal?
I think that the miners are still going to, you know, the miners are very, very profitable right now with gold as high as it is, and it can peel back and their margins are not going to be hurt too much for a consolidation, even the size of that intermediate degree wave four, which could, you know, I'm showing like the more normal consolidation region because I think that's important when you're dealing with risk management to look for what would be most normal and not rely on it to be a more mild consolidation. But also there's a lot of them that have a lot of silver exposure and have a lot of copper. I know you guys were talking about being bullish on copper. Platinum and palladium also look pretty bullish here. And so this is the gold to silver ratio chart that we've looked at a lot together.
Yeah.
It has a lot of potential for this extreme region to hold as resistance, and
Right.
for silver to get some time to shine.
Okay. I have the high doing silver around the, I don't know, 36 level. Take out the prior weekly high.
I would love.
There.
Yeah. So
Okay.
I'm look the same move that gold looks like it completed off of June. Silver got a deeper retrace and made a lower low for its B wave, and then did not advance and fill out the same C of 3. So in the same overall larger structure for Elliott Wave, silver has hung back a lot, but allows for it to be much more bullish. And I think this fits nicely with that ratio chart, where we can get one more high in this A wave and then consolidate in the B. But there is a potential for this to have been, I switched over to this cleaner version of the tab because the other one's cluttered with a lot of the microstructure. It is possible that this is a 1 and a wave 2 start to an ending diagonal for the C wave already. My preference, though, because Fibonacci Pinball says if we can get this A wave to the 764 with one more little micro high, and then hold a B wave consolidation, maybe as that larger fourth starts in gold, then on a bounce in gold, silver can outperform and run all the way to 40 for just this third, then hold a fourth wave, and then get a fifth wave up towards the 43 to 44 region for a more significant top. And then it gets that same parentheses wave 4 to catch up to gold on the consolidation.
Yeah, the silver miners look great.
Yeah, that probably is far more bullish than GDX and GDXJ, especially the SILJ. With this, I think this, despite this being such a deep fourth wave here in a leading diagonal for this wave 1, this fits better with the counts for GDX and GDXJ along with other things. So allowing for more of this wave 2 makes sense. Also, it's very hard to get 5 waves up in this move as a green wave 1. So I would like to see a little bit more consolidation in the near term, but using the leveraged inverse ETFs as temporary hedging on scalps during the day, but keeping most of my long-term miners positions very much intact because
all right, and this was all right. So this was just wave 1, then we're correcting to sometime in April for a 2, and then the money wave must be setting up after that.
Yep.
Okay.
That would be the third of a third.
All right. Well, you know what? I'm glad I asked you to talk with conviction today, because I know, but your stuff is good when your heart and your head is into it, and we got some great stuff from you today. I
We also
really
do
appreciate.
uranium a lot, Dale.
Oh, uranium. Okay.
I've been when we had the potential for UEC and CCJ to be holding a 1-2 structure off of the end of last year in a 1-2 start to an even larger primary degree. But URA and a lot of the smaller names were flashing a warning of that this was, instead of being wave 1 and the start of the primary wave 3, that this was a larger fifth for an even bigger primary wave 1, which ultimately is more bullish, much longer term, but does allow for this to be a fourth wave that we're working on more of a bounce in the short term, and then allowing for an attempt at one more low
to complete
before that reverses in the bigger move. And that seems to be what more of the smaller names are following. But UEC and CCJ did hold on to this 1-2 potential off of the September low. So as long as that 460 low holds for UEC and the comparable low on CCJ, those could force URC to get more than this wave 4 and fill out more of the start to that 3 of 3.
Wow. Okay. Well, that's going to be great to determine. WTI quickly, is it like uranium? Similar chart pattern
So
or weaker?
I'm more enthralled with the actual energy
Yeah,
stocks as
they're
opposed
so
to
much stronger than crude.
right, as opposed to oil itself. I think
Okay.
oil can still try for one more consolidation low and then turn up, and that might make this whole structure count better as a triangle for this B wave off of here. So A, B, C, D, E, F, and maybe a G wave of a triangle. But giving us the benefit of the doubt that it's starting the third of a diagonal. So also allows for some small degree consolidation in the very, very short term into just the 90 to 87 region would be the ideal support for XLE. And then we can start the rest of that third wave up that can take us well into the hundreds.
Well, I mean, Buffett has liquidated a lot of things, stocks, real estate, but bought Oxy.
Right. Oxy doesn't quite have the same structure. It
Didn't
made a
look as
lower
good to
low
me.
for its wave
Yeah.
4, and there's other things like Devon Energy also made a lower low for this wave 4 back here. But a lot of them held, and there's a few like COP that can count as that same wider flat wave 4. So instead of holding lows that XLE and a lot of other things held from back here in 2023 or at least mid 2024, drop to that lower low, which is actually technically still a higher low of a running flat, but does potentially count as an even larger primary degree wave 1 and wave 2. I mean, that could still need one more low where this is just a fourth wave bounce, but micro support on something like COP is in the 93 region, and it's looking strong off of that recent low. So a lot of bullish stocks in the energy sector, not just the medium side.
Great look, Zach. So if someone wants to learn your style of Elliott, what would be their best way to go about it?
Jump onto ElliottWaveTrader.net. We have a lot of free education resources. There's a lot of good webinars and some PowerPoint presentations that you can click through that give you a rundown of some basic stuff to Elliott Wave, going on up to more advanced stuff with Fibonacci Pinball. And we offer 15-day free trials. I chime in the markets room and other services on the site, but primarily spend my time in stock waves and the metals mining and agriculture service.
All right, my trading warrior brother, Zach Manis, who put up with a crabby old man interviewing him today.
Never. Always a pleasure.
All right, brother. Well, I hope you have a great quarter coming up here, Zach.
Thank you.
That pips just overtake you like a flood.
Amen.
How about that?
Amen.
All right, so check Zach out. He has every Elliottician has their own twist to things. What I like about Zach is he doesn't show extreme targets and counts. He keeps things pretty conservative, so that keeps a trader's objectives.
I do try and make sure people maintain a good awareness of how that translates into risk reward, and also an awareness of risk skew, and saying, look, we can have a larger degree target here, but let's focus on the immediate move in front of us. And if the risk reward works for what's right in front of us, then for the larger part of it, that's going to be even better.
Yeah, take what the market's giving you.
Right.
Instead of what you want from it.
And I try and be, I use some color coding and some different colors for subwaves to draw attention to things, but I really try to avoid alternate counts that point in entirely different directions as well. And if there is something that's nuanced difference, I'm going to discuss that in more detail in the room, and also show where the overlap is and at what point those two paths diverge, and how we should be able to tell the difference of which way to lean at the smaller degrees.
Sounds like you could learn a ton there, guys. So thank you, Zach. I'll be talking to you in June this summer.
All right, sounds good.
Have a great spring. All right, buddy.
You too. Take care.
All right, so that's a wrap, everyone. We went a little over to join the team in 12 minutes on the morning edge. Don't just count your waves, count your blessings. And good turnaround Tuesday to you. See everyone tomorrow. Adios.